Hey, what's up everybody? Welcome back to Royal Blu FX. In today's video, we're going to quickly go over some of the trades that we've taken just as of yesterday on October the 18th, which is a Tuesday. This is going to be a trade recap video, so without any further ado, let's begin. Also, for those new members out there, if you haven't subscribed already, please go ahead and subscribe to this channel because that will help us to continue sharing more and creating more videos for the future. And if you're not a member of Royal Blu FX, go ahead and join us right now at RoyalBluFX.com to start your trading today. So let's begin. It's all good. Are you looking at me? Well, you should. All right, so as always, our daily routine is to always start on our 15-minute time frame, which will be considered as our higher time frame, and then we scale all the way down to the 1 minute. All right, so what we did was we started on the 15-minute time frame, and what we generally do is just kind of zoom out a little bit and see where there's liquidity lying around, because we always know that liquidity is that fuel for the markets, right? To push high or low. If you zoom in here, we were focusing on this area just as of yesterday, and then I just mapped out when I started trading. Obviously, I mapped out the liquidity. You can see there's a buy here. There's another buy going up as well. We identified a break of structure, which also signified to us that there's a potential buy going up here, and then we identified a little bit more liquidity on the 15-minute time frame. So it's good. It's a good idea just to get a sort of like a basic analysis on a higher time frame first, and that and what that would be for us is normally the liquidity and the trend and the structure. Okay, so now if you zoom out just a little bit, I've been scoping this for quite some time. When price broke above this high here, there's a bunch of more liquidity here that we've mapped out as well. You can see there's two double tops right here, right? Double tops. And so usually when liquidity grabs, it goes the other way. So we're looking to trade against, sort of or away from liquidity. And then now I'm going to go show you guys here on a lower time frame to see what is actually happening and what we anticipated and why we took some of the trades that we've took. Let me just get this here. All right, let's go scale down to the 1 minute. So obviously after the 15-minute analysis, we try and do our due diligence again on seeing where all that liquidity is again in the markets. Now liquidity plays a huge part in this, obviously, but if you're probably asking me, why are you only mapping liquidity? What about breaks of structures? What about chalks or maybe like inducements or say imbalances and stuff like that, right? Like, isn't all that important? Well, it is, but the reason why we mainly focus on liquidity again is because, well, you've guessed it, because it is the it pushes the markets, right? It is the fuel for the markets. So anyway, right here we scale down to lower time frames. We identified a little bit more liquidity here, a little bit more liquidity there, even though I didn't identify that as a dollar. Didn't put a dollar sign there. And then as you guys again know, we start trading at 4:30 p.m., which is the New York Open. We always trade the New York Open, and 4:30 would be for us right around here, where it says 6:30, which is Los Angeles time, but I consider it as 4:30 here. But we always start about 15 minutes before the market open, right? Just to kind of, again, get a viewpoint of what is actually happening here. So you can see here, price is going very bullish. It hasn't really been any, it hasn't been steady, right? And what I mean, excuse me, not steady. What am I trying to say here? Price has been very bullish here. It hasn't really given us a lot of, liquidity formation, a lot of retracements, big retracements in this case, right? Something like this over here. So my anticipation was, okay, well, since we're over here, right, we need to be mapping out what is currently happening here, because I'm going to be taking out that, I'm going to be entering on that New York Open. So let's scale even further down. I'm going to show you what is actually happening here. All right, if this works, bear here with me for a second. All right, there we go. All right, so let's go down to the 5 seconds. All right, so again, think about what I mentioned and what I said, that we trade the 4:30 open here. As price was here at the time, I started about 15 minutes before the market opened. You can see it's 6:15 here, right? So we're just looking at price. I was looking for a potential sell down here, maybe because potentially because price is bearish here, and we have a bunch of liquidity at the bottom here. Price just rejected here, so I was looking for price to come from this high here to break this low and take the liquidity, right? But as we all know, we all shouldn't trade towards liquidity. We should trade away from liquidity. So here, as you see, I saw liquidation. I saw price stopping here, respecting the supply zone just a little bit. And then I was looking for price to go bearish, but it didn't give me that, obviously. And so if it did go bearish, I would have looked for a potential sell from around the supply zone here. Now, normally we wait for that aggression. Once the aggression happens, it gives us that chalk formation. Then we look for the flip or for the extreme to take a sell off, and then we look, to sell it off, right? So let's continue up here. So price is going bullish. We knew that this was our last area of supply zone here. The reason why I marked this area of supply zone right here is because we had this area here, this low, take out this high, so it liquidated this high here, right? So this right here was the last area, the last up move before the major move pushed bearish. So we were targeting this area, okay? And so once price came in mitigated, again, my rules is I need a chalk, right? We had price mitigated. If you zoom out here, we had some inducement there. You can also call this liquidity as well. This is also inducement, to be honest. So there's some liquidity, and the main point of this trade here is to identify liquidity, the internal liquidity here, and that will determine whether or not price is going to continue bearish, because a lot of the times, right, as I mentioned to you guys, that liquidity is the fuel for the markets. Even though we didn't have a break of structure here, as you see, this low was not, this low right here wasn't broken by this high here. So technically, prices shouldn't be going bearish, or I shouldn't even be looking for sells, right? But in this case, since I knew what I was looking for was that there was a lot of liquidity in here, internal liquidity, right? We also had that higher time frame liquidity that I mentioned to you guys on the higher time frame over here, right here. Okay, so this also helps with this move, this bearish move here. It helps us because price just goes up, takes out liquidity, and goes bearish from that side, right? Going bearish. Oops, let me just go back. It just took me out of the data point. Excuse me, guys. Hold on 1 second. All right, so here we are back. So this is why we're looking for the sell here. Now, when price tapped the supply zone, notice how price broke this low here. It gave us the chalk. And the reason why we identified this as a chalk is because this is the low that was responsible for this break of structure over here, right? So this was our low. You can see that now we're confirming that we're looking for sells. If you zoom in like this, what are we waiting for? We're looking for the aggression. We're waiting for the retracement. We had a beautiful chalk presented for us right here. There was our chalk here and here, right? So then obviously we're looking for a sell. Now I want to show you something here. When price came back to the supply zone, I noticed one of two things. We had liquidity here, as you see. Price took that liquidity, and I was going to then look for the selling position right over here. But the reason why I didn't sell it there is because there was no liquidity formed. Let me just zoom in here, and you'll see what I'm talking about right here. Okay, so normally when we're looking for entries, we're always looking for liquidity to be taken. There's no liquidity there, as you can see, so I was kind of wondering to see if price would respect this high, and if it did, if prices went bearish, then I would wait for prices to, again, to form liquidity, internal liquidity, for price to go up for me to sell it off. And here it didn't present that. So what happened was this area here liquidated this area of liquidity and pushed prices even higher, which was totally fine with us because we marked this supply zone as our highest at that point. Okay, so once price tapped, notice again we had that same aggression. In my anticipation here again is just to wait for liquidity to form. And once we had liquidity forming right here, notice this was a good sign for me. I was like, all right, I'm ready for this, right? So I was looking forward to selling at this high here. We also marked out liquidity at this high just to kind of see if price is going to respect this high. If it didn't, it may potentially go up here, take out this liquidity, as you see right over here, how price went aggressively to the downside, right? And then, and so again, I was seeing this huge wick here build up like this. I was very antsy about taking this sell. I didn't want to take the sell because there was so much imbalance here, and I didn't know where price would stop exactly in order for me. There was no sort of knowledge as to where I should put my supply zone in here. Look, if I do this, right? Notice how big this supply zone becomes. Now this is my demand zone, but if I did a supply zone like this, might be better. Like this. You see from this wick low right down here to this high, this is a huge supply zone. I didn't want to have a huge risk setting here just like this, right? Something like this with my reward all the way down like this, right? So now I'm exposed to way too much risk. And that would be 30.4 pips risking, right? I could do about 50% of the way, 0.5%, right? Risk probably the first half, and if it took me out, then I would go ahead and try and potentially see if I could risk the second half here, right? So in total, I'd be losing 30 pips in one whole entire trade, which would be very bad. So we definitely want to stay away from those. As you can see here, like as I mentioned, liquidity was taken, the high wasn't respected, prices went up again even higher, taking out more liquidity, and again my clock resets again, and now I have to say to myself, okay, I'm looking for the aggression, right? So the aggression came in again, right? This was a good sign. I saw more liquidity here. And this is the high that I was looking for prices to potentially sell off from. Although, if you look in here, there wasn't much liquidity, right? But then, and again, when I talk about liquidity, I'm talking about sort of like, you know, the double tops, right? Or the fairly looking double tops, like something like this, right? Something like this where prices go up, take it, show me the aggression, chalk boss, and boom, sell off. So I saw this here, obviously. Then I'm thinking, okay, well, this is where prices should sell off. If not, I had already created this liquidity area here. So I'm just waiting for prices to give me that sort of initial aggression with that initial liquidity area that price can present to me, right? So if you zoom out here, I want you to see something. We're still respecting the supply zone. And what is interesting here is when this high here took out the liquidity of this high here, it pushed bearish. Again, it showed me another aggression, which was a great sign. Again, I had this large, nasty wick. I understood that this was liquidation. This wick liquidated this high here. So in theory, we should have had this as our supply zone, which we did, as you can see. What I waited for here was price to liquidate this high here. I went on the 1 second, to be honest. I was, it's pretty messy over here, but if you toggle this here, you'll see what I'm talking about. You can see here there's a lot of liquidity. So once we had that initial break of structure, remember what I said, I need to be able to vividly see liquidity. And then price then came and took that liquidity, right? We targeted our high here, and this is what told me the sell was present here. So I just took a sell here, you know, without having, you know, and trusting in my process. And then this is what told me where to sell it and how far I should hold it. Now, here I had let me see, what did I had? I had a 1% risk. Okay, the risk was a little bit big again, but to be honest, I didn't risk this much. I had risked this much, so this was about 9.7 pips. Okay, I originally had it up here when I started out at 15, which again is all right. It's not too bad, but I'd rather keep my pip risk at least 10 pips or below. I would really like to be anywhere close to 5 or 6 pips, right? So we took the sell here, and now we just entrusted the whole process. We were looking to target, let me play this over here. We're looking to target the slow because this was the next slow that price has been to, right? And we obviously can't guarantee that price is ever going to reach below the slow. So what I did was when I took the sell, I just took my partials, and it's always good to pay yourself just a little bit, right? Because you did all the hard work, so you better pay yourself. And the reason why I'm paying myself is because if price goes against me, then of course I start to regret that trade, and you know, of course I can break even, but then again, I regret doing all the work, and I regret not being able to make money out of my trade. So I'm always paying myself, and this is obviously, this differentiates to other traders. You know, you don't have to pay yourself. You know, whatever your risk management is, you know, should stick to it. So I paid myself a little bit more once we got to this demand zone. You can see we had more liquidity here. I was looking for a buy here, but I didn't get the proper liquidity setup that I was looking for here. So we skipped this trade, and or we skipped this part of the market, and we stayed into the market. So another about 4 or 5% goes down. I'm still liquidating this, partials. I'm still taking more partials out of this market. I'm still paying myself while I'm still holding this trade to the downside. So I want you guys to see what's happening here. Let me just fast forward this a bit, because as this was going, I wasn't trading anything. I was just holding this whole entire trade. This was a good sign. I don't know why I wasn't paying attention here precisely. Sometimes I'm just marking and doodling around and not quite paying attention to what is truly happening and whether I should take another trade or not. But here is where, if I just zoom in here, you'll see that we had beautiful liquidity right over here formed. There was a sell, there was another sell off here. This high failed to take out the slow, so we had more liquidity form. And then there was that high here that liquidated this high over here. And of course, I didn't sell this at all, but it would have been nice to, obviously. And then from here, prices just went bearish. So I could have looked for some great opportunities there. Fortunately, I didn't sell it, so I can't claim this trade as my own. But I still stuck to this whole entire trade, right? Because my break even is at this risk zone right here. So what you want to do here is really just entrust your process, right? Like look how price is going so bearish here. It's going entirely bearish, and all because of a trade that I took from the extreme high right over here. So I'm still liquidating it. I'm still making money. Let's continue here a little bit quicker so I can show you guys what is happening. We're approaching this demand zone here, and of course I'm looking for a buy here. The only reason why I'm looking for a buy here is because if I zoom out right over here, right there, you can see that there's some liquidity there, right? I had this low here, liquidated this low right over here, as you see. Right there, right? But we also had more liquidity right here. So, price comes and goes to liquidity, but it doesn't always have to take it out, right? It can take out, it can come and mitigate the areas that haven't been mitigated, like this area here that liquidated this low right over here. It could mitigate this area right here and then continue pushing bullish, right? But those are the two things that we look for, is where price has created liquidity and where price has not mitigated yet, right? Where price liquidated another low and hasn't mitigated. Those are potential signs of where price is going to potentially go to and mitigate. All right, guys, sorry I'm back. My computer's a little screwed. I think I have too much storage in this computer, so that's why it's slowing down the. It screwed up my computer and slowed down my computer for a little bit. Okay, so as you can see here, we were looking for sell still. Now you're probably wondering, well, why are you looking for sell still, right? I mean, aren't you like tapping demand zones here and you should be pushing bullish? Well, not necessarily, because if you see here, from this high to this low, you can see prices are still bearish. Prices are still going bearish, right? So what I'm trying to do is capitalize on the moves that price has taken out liquidity, and prices are going to mitigate a high or a low, in this case a high that hasn't that liquidated a previous high, right? So I would potentially look for an area like this, for example, here, right, like something like that, to look for a sell. But in this case, you can see that when price broke a low here, there was a lot of liquidity in here, right? Price came up, liquidated all this here. You can see there's liquidity here. That's why I marked my supply zone here. And I know it's very small here, because we're on the 5 seconds, but bear here with me. I want to show you what I did here. All right, if this does not freeze on me again. Here we go. All right, so notice when I play this, okay? My rule is to look for liquidity all the time. All right, so here we can see there's liquidity, right? Price went up, took out that liquidity. We see that aggression right over here that just presented itself. And I don't just enter off of aggressions right after aggressions, right? There are probably a lot of other people that enter off of aggressions, but you need to be really patient in identifying liquidity, right? So you can see prices are pushing bullish right here, right? There's a lot of buyers buying here on the same level, same area. There was sellers that sold here and here, right? So I looked at this area here. There was a sweep of liquidity right there. You can see this wick here swept that high right over there. And a sweep is very interesting because it's almost like a chalk, or it is a chalk. But a sweep of liquidity is where price sweeps the liquidity and goes bearish. So that tells us that that is our last area of, or the order block is. There's a hidden order block in this area, right? So I waited for price to come up, and once price came and took the liquidity like this, I waited for the aggression again. I want you to see here. It's kind of a little hard to see, but I'll show you guys right over here. Okay, notice what happened over here. We had price come up, mitigated the supply zone. We saw the aggression, and then we had that chalk. Now, you might be asking me, well, you know, Bennett, after that chalk for your entry, aren't you looking for liquidity? Yes, in most cases I do. In a lot of cases I do. But in this case, since we're in the 5 seconds and I'm only looking at microstructure here, and I can scale down the 1 second and see if there's liquidity, but everything becomes so pixelated. So I went off with my with my own gut instincts here, and to understand that since all my rules met, I was able to sell this off at correctly here. So as you can see, we sold this off. We had, what was our win rate here? We had a 10.9% here. Okay, so once price pushes bearish here, we're always taking partials again. Okay, and so there we go. That was our TP. We TP'd down here only because all the way to the far left, it showed us that we had a demand zone that we were need to be looking out for. Now, as we're playing this whole thing, you can see that we're still in this huge entire trade here, right? So we're still taking partials along the way. Now, I kind of regret not holding this all the way down here. As you see, this is my low. So I kind of regret not holding that, but yeah, that would have been about a 20% right there for us. So let's continue here. I'm only looking for sells here because this huge swing is still pushing bearish from the higher time frame, and I'm not looking for any buys whatsoever. Remember, if you're going, you got to be going with the trend, okay, with the trend and with the structure in its own, and that's direction, right? That's direction. So you can see structure and trend is all pushing bearish. So what did I do here? I saw that there's a break of structure. I saw that there's liquidity presented up here. This is my high. There's more internal liquidity in here, as you can see. There's a high, right? There's another high. This high failed to break this low, so it created our fairly high double tops. Price pushed bullish here, and then all of a sudden, it took out some liquidity from this high right over here. Not necessarily this whole entire thing, even though I was waiting for price to come right here to even mitigate this imbalance area here, to fill up this imbalance, and then potentially come in, potentially like mitigate this area here. But you know, you got to follow what price is showing you, right? So when prices are retracing, there's the only difference here that I see. What I'm looking for specifically is that aggression. That aggression came in the form of a wick, and this wick is our type 2 break of structure. All right, so if you don't know what that type 2 break of structure is, guys, you know, you can go and check our course, obviously, because we explain everything over there. But this is our type 2 break of structure, and then we didn't sell it off, even though we knew price should have gone bearish, but we sold it off as soon as price showed us some more bearish momentum here, and then we just pretty much took the sell because we knew once the chalk performs and it comes and mitigates, right, and it then pushes bearish like this, we're automatically into this trade. Now, again, we look for liquidity, but in this case, since we're trading microstructure, it's hard to identify all this liquidity, right? The main part of this is understanding what is actually happening on the main structure. And this main structure is pushing bearish. You can see all this liquidity is here. It's liquidating. It's showing it's mitigating. Then it's showing us the aggression. And the aggression is the most important thing because one of the most important things because that shows us that price is changing direction. So in this essence, we have a chalk breaking the high and a chalk breaking the low, and then we took this trade, and then we TP'd right at here at this demand zone. Now we took more than half of our earnings here, right, and then we just stayed in for the long haul. Okay, so now we're also taking some of the partials, and then we're staying in this trade now, and I believe we targeted this low all the way down here. Yeah, this low all the way down here, and we TP'd right here at this low, because this is the lowest of the lowest on the hard time frame. So let's play this quickly right here. All right, and we're just about TPing it there, and we had a great risk to reward here. This was a 40.5%. all right, so we made 40.5% on this trade, and at the same time, if you zoom out here, we have a huge amount of another 42.2% here. So and I regret not holding this one, but you know, it is what it is, right? It's still a win in any case. So yeah, so that's how we did it, guys. All right, so I hope you guys enjoyed this video. If you guys really enjoyed it, obviously, and thought it was very informative, please show a huge thumbs up on this channel, and definitely subscribe to this channel, because we always leave free content, guys. We love you, and I will see you into the next.